This is Benzinga Live. Spencer Israel and producer AB. What's up, everybody? How we doing?
Someone told me buy high, sell higher. So.
Let's get Matt Hammond on the show to talk some IPOs. Jake Wojacek from Trend Spider. We have a
breaking news. Boom! What is up, everybody? Happy Thursday. Welcome back to another episode of Benzinga Live. I'm your host, producer AB. And today's an interesting day because we are off. The markets are closed tomorrow for Good Friday. So let's go see. Let's just do a quick rundown of our major overall indices before we get started today. And then we have some, of course, very special guests getting ready to join us. We've got Stephen Hoad, the Stop Hunter, hanging out backstage. My man downtown, Nick Brown, will be joining us for a few minutes today. He is off school today. So excited to get Nick on, catch up with Nick, see what he's been up to outside of, classic, high school stuff. And then we will also have Rob Roy on from Wealth Builders HQ, as well as Mr. Steve Kalayjian. All right, so S&P 500, pretty flat, as you can see here, down 0.01% right now. So I don't know. I guess traders are saying, stuff's about the same as yesterday. Which, honestly, I'll be honest with you guys. I was surprised you don't see a lot of days where the market just closes, basically unmoved. I think it's more recent, maybe especially since COVID too, and since options trading has become more prevalent and started. I don't know. Maybe our first guest, Stephen Hoad, could speak to that because he's been trading for a lot longer than I have. But just saying it's almost surprising, right, that the market doesn't have more days where it's unmoved. So I don't know. I wouldn't be surprised. I've said this before. Even as far back as a couple months ago, I wouldn't be surprised if the market kind of trades sideways because, again, I'll make the kind of analogy or metaphor that to me, I see a ceiling and a floor with the market right now, meaning that the ceiling, what could stop the market from moving too high, from the S&P 500 shooting off and making new all-time highs, the NASDAQ 100 shooting off and making new all-time highs, is the fact that our interest rates are higher for longer than what was going to be initially anticipated, right? It's not like they went up to 5 and then they're just going to go straight back down to 0 where we were at 3 years ago. No, it's probably going to be up around, I'd say, somewhere in between 3.5% and 4.5%. for the next, year. Who knows? Unless something big, bad happens, which, again, would probably be a ceiling if there is some sort of economic, turmoil or uncertainty out there, and that would force the Fed to cut. The Fed's most likely going to hang around 3.5%, 4.5% for at least a year or so, and then we'll go from there. Some people are saying it could be longer. So, of course, there are people out there that think it could be shorter. We don't know exactly, but that's the ceiling that I see. And the floor is just the fact that the underlying economy has been strong. I know we've had some renewed unemployment fears, or job openings were lower than expected, and all this stuff. And we're going to talk about that economic data. But when push comes to shove, the economy's been strong. That's why the Fed's been able to raise rates higher than what was initially anticipated, is because people thought, once we hit 4%, they're going to need to cut. No, they hit 4% and things were fine. We were still adding jobs and inflation was falling. Economists were perplexed by this, saying, how is it possible that you have inflation falling while unemployment is falling? We thought they had an inverse relationship. We thought unemployment had to go down for inflation to go down. Unemployment to go up for inflation to go down. That wasn't the case, or at least it knock on wood, hasn't been the case. And of course, we are expecting to see unemployment start to trickle up. But as long as that's coupled with a drop in inflation, it wouldn't necessarily be the most unhealthy thing. But, so the way I see it is essentially, this is my long-winded way of saying, it makes sense why the market might be trading sideways, especially right now. We've been trading up a little bit past couple weeks. Had a little sell-off, people just taking some profits. But yeah, Roblox has been a good swing stock. Let's check it out. AB, what up, Nick Brown? See you in a few minutes. All right, let's go over to Roblox. I haven't honestly. I should have tried to guess where Roblox was at because I haven't looked at this stock in a long time. Um, yeah, I mean, from a chart perspective, you have this little double bottom. Looks like you're running into some potential, past support levels that could act as resistance levels right here. Well, it looks like $50 might just kind of be a big. No, I guess 50 would bring you all the way up here. So let's see. So there's this point up here that'd be at about 53. Then this one down here, 47. But just from a zoomed out perspective, looking at this night, I mean, I like charts that look like this, right? That have been beaten down, have a nice double bottom, almost as if they found kind of a support level down here, and then could be nice swinging back up. But I'd be wary, I guess, of these potential resistance levels right here. Of course, I mean, the stock has gone from now, as you can see, $25 to $45, so almost an 100% increase in just a few months. And that's just, I mean, I always worry with stocks that are up that much that quickly that there could be, pullbacks here and there. So I don't know. I mean, let's ask Steven what he thinks about this chart. Let's give Mr. Hoad our very special Zinger Nation welcome. Steven, how are you doing today?
Hello, I'm very good, thank you. Yes, fine. Not bad at all.
So what do you think about my crude and preliminary chart assessment of this Roblox chart?
I was just having a look at the Roblox as you were speaking, and I've drawn one myself. Let me just bring that up. There you go.
There we go.
That's what you're talking about, that double bottom in there, weren't you?
Yeah. So we don't. Yeah, go ahead.
So now we got this. I put them Fibonacci's on there as well. This is a weekly chart, so it's like you said, a step back to just see what the longer term picture is. It's a bit of a roadblock, on Roblox at the moment. about there, $48-50, and then next resistance, you got a lot of noise around that level, $66-67. So I reckon nice little break up there. Probably see a bit of resistance, and then again you got another load of price action and noise around the $80. But technically speaking, yeah, that's a double bottom, and normally you would take the middle part and put it up to there as a sort of a price projection. So $80 not out of the question. There you go.
Yeah,
that's my long-term Roblox. As a company, I'm not so sure, but on a chart, then $80 potential.
Yeah, you'd probably know a lot more about the company if your kids were a little bit younger. But I saw the same thing. So you had the double bottom there, and then but also potentially that resistance right there. But Steven, so the reason or not the reason we brought you on today, of course you come on every Thursday, but the topic you reached out to me about, which I'm excited about, which I wanted to look into, we're going to look at some golf and some sporting stocks. Is that correct?
Yes, that is. We needed an excuse today to, talk a bit of golf. We both like it. So I thought the Masters, that was the cue to get in there today. So I had a look, and picked, a few stocks out there that, they're obvious stocks really, in that space. Not too many players. I suppose the golf sector has consolidated quite a bit. And these were my 6. You can see Nike, obvious one there. Actually, they haven't all been doing that well really, other than I put Sporting Goods in the bottom right there. They're one of the biggest sports retailers, I believe, in the US. They've got the best looking chart there, but Puma above them, they own Cobra Golf. Then you got Adidas, Callaway, who also got who is it? Callaway's other ones, Jack Wolfskin, Travis Matthews as brand names,
and Top Golf.
Yeah, they're driving range stuff, and Top Tracer, and Acushnet, however you want to say it, Titleist, FootJoy, and Cageus. But they were my not my master's picks, because that's another bet altogether, but stocks in the golf sector. And over in the UK, golfers, since COVID, the younger generation has, really got into it, and it's a big growing boom sector at the moment. It's become a lot more trendy and fashionable as well. So some ideas there. What was it? If I was going to pick one, Adidas maybe for recovery. They had the problems with Yeezys and other issues, haven't they? So maybe a good bit of value there in Adidas.
Remind me, did you say that is there a golf brand under Adidas?
Don't think there is.
Okay, but just say they make golf shoes.
Puma, and apparel, that sort of stuff. They're into lots of other sports, but I don't think there is. Puma's got Cobra.
That's right. Okay. Actually, I remember. Okay, so wow, this is probably a.
Well, Adidas used to be TaylorMade, I think.
Yeah, they sold
rid of it.
So who they sell TaylorMade to?
That is a very good question. I don't rightly know.
Let me look. I'm gonna check this article real quick. So walk us through. I mean, let's start with the Adidas then. Just because it's like you said, the most beaten down maybe of the group, and a potential recovery, and then we'll get into some others. I'm gonna look into this TaylorMade deal and see who bought them.
Yeah. Well, we had the Kanye West problem as well, didn't they? Adidas and all that stock, and that of recent has driven that price down lower. But since then, things have calmed down a bit. They might have sorted out a few problems, and you can see really from November time, nice strong run up in the price again, hitting resistance though around 146. This one's the euros from the German stock exchange, but it's an ADR stock, so you can trade it in the US quite easily. Up to 190, could see it moving reasonably quickly. Then it's going to pause a bit, I reckon, before moving on off higher. But you've got to look to the stock to the left of that one, Nike. I think they're stealing the march on Adidas at the moment, especially in the golf field, I believe, but also just generally in business terms. So you've got this sort of nice bottom, settling in for maybe a stronger move back up to that 38.29, $65 to $70, maybe in Nike. So of the big sports brands, Puma as well. They're quite big, not as big as the other two over here, and they've been struggling a lot more of that. I think they jettisoned Bryson DeChambeau as well. I think if we're talking golf names.
So okay, I looked it up, by the way, and it was just a like a private equity group. Let me just get the I forgot.
Yeah, okay.
KPS Partners, I think, or something.
I think they went in bigger, didn't they? Adidas into the golf, but I think realised footwear and clothing's a better bet for them.
As Jay Rice points out in the chat, Skechers SKX makes some golf shoes as well. But so what about, let's go specific now to more of the actual head-on golf names. I mean, like you said, in the UK, golf's gotten a lot hotter since COVID. Same with the US here. But the stocks haven't really been that reflective of that. I mean,
no, exactly. That's a strange picture from it, isn't it? They don't. You would think you'd see some more bullishness in them, but other than that, Dick's Sporting Goods, which is more of a generalistic play, then it's really quite flat, isn't it?
Yeah, and I mean it's insane because like I remember there was a time it was hard to even like find used clubs, let alone new. I mean, like it seems like if the golf they don't have any trouble selling product. Maybe it's, I don't know, maybe it's because people don't really need to buy a new set of irons every year. So then every year the companies come out with like brand new ones and spend all this money, and then they don't. I don't know. I have no clue why it doesn't seem like a slam dunk because as you know, the equipment and everything is so expensive.
It is, yeah. No, what I suppose one of the bigger leads has been the driving ranges, like your Top Golf, Top Tracer type thing. That's become very popular as more of a social activity as well for the younger generation. A Friday night quick to the driving range before you go off down the pub. It seems to be a popular activity, but you're right. I don't know, where the earnings and the fundamentals are showing in the charts, but it's not a great picture really for a sector that has been booming.
Yeah, and Top Golf, of course, Callaway, of course, made that purchase of Top Golf kind of during COVID, And like those, I don't know if you guys have those over in the UK, but here they're crowded, and like you said, people are buying drinks, spending money there. So I'm
Packed.
surprised.
Yeah, packed.
Again, there's not a ton of bullish activity here. The stock did get crushed, I remember, at the very beginning of COVID and went down to like $10. Callaway did, and then it went
Yeah.
all the way up to,
Yeah.
looking at it now, like 35 or so, and then
Yeah, there you go.
came back down, and almost has, I don't know. I mean, if we can get back up on the upswing and then try to get back up to those all-time highs, then it would look like a decent, recovery from here. But right now
Yeah.
the chart doesn't look great.
No, it doesn't. No, you got that horrible downtrend that it's in, and it's even in the last few weeks, months. Again, the shorter term is down, looking like it's heading towards $17 rather than moving up. Maybe it's something to do with the purchase of the sort of brand sort of expansion, Travis Matthews, Jack Wolfskin, those type of brands. Maybe that's impacted potential investor bullishness there. Don't know, but yeah, it doesn't look a good picture. And the same for the guys on the left, the Titleist, FootJoys, K-Juice in that group, very flat as well.
Yeah. Well, so what else are you watching in terms of the overall market? I mean, I know or I guess let's stay on here for a couple more minutes. Which one out of these is your favorite? You said Adidas.
Yeah, I'll go for Adidas or Adidas. Yeah, Adidas.
No, I like how you say it. It's just how I think we Americans might be saying it wrong. I think it's
we
German
always
company?
get told off. We always get it is German. Yeah, we get told off for saying you say Nike and we say Nike. So we get told off for that one, and that's our fault. So I'll let you off that one. I was actually thinking outside. The way sports has changed so much over the last few years, and again, lockdown. We heard a lot about esports over here. A lot of the FIFA and I don't know, these NBAs and NFLs creating esports leagues and stuff, and that seemed to take off. You have buzz sectors, and esports a few years ago was quite one of those. And at the moment, I pulled up a few charts there, see what's going on. There's an ETF called the Global X Video Games and Esports ticker HERO. And as you can see there, it's not a pretty picture. Again, been down 55-ish% in the last year, and unless it can push on up through this sort of zone, the sector, it's a good reflector. I looked into the stocks under it, and it's a good reflection on that space per se. So yeah, it's not a glam area at the moment. And in terms of individual stocks, again, I did a quick look at what I could find. You have to go to the big boys, I think, if you want any value out of esports. Like Nvidia, Microsoft, Tencent's an interesting one. Chinese company, top left. League of Legends, esports, but they're also a big investor in a couple of companies called Hoya and Douyu, who are big in the esports sector as well. Good value, Take-Two Interactive, NBA esports league they've got. Grand Theft Auto, those type of things. So yeah, and then Electronic Arts, another traditional one, and C, a Singaporean streaming esports organizer. So yeah, even that sector doesn't look too exciting at the moment either.
Yeah, I mean, I think Take-Two, from a more fundamental standpoint, I like more in the long term. Like you said, some of their brands are just huge and have a lot of, I mean, when they put out a new game, X amount of people are going out to buy the new 2K or the new Grand Theft Auto. But yeah, I mean, Nvidia has been on an incredible tear, obviously with the AI and everything else going on. But I think a lot of people are still bullish this sector for the long term. I think it just grew a lot during COVID really quickly. Yeah. So it's fair to see some of those come down a lot, I think, because they grew more than anything during COVID.
Yeah.
But back to the real sports thing real quick. One thing I was curious about, I don't know if it's the same in the UK as it is here, but with pickleball, everyone's been playing pickleball here.
Oh yeah.
This variation of tennis. Is there any way to invest in companies that are in that? Like, I can't think of if any of the big tennis companies like Wilson Sports are public or anyone like that.
That's a very good point. But over here, yeah, I was amazed. It's like become a favorite. You know, there's courts going up all over the place. We even get it on TV now. It was big down in Spain, and then it's just expanded over Europe, and everyone seems to be talking about it over here as well, playing it. So
yeah, and there's a different. I know there's a different racket sport that's big in Spain. That's just called like paddle. And they have like all these different variations. But yeah, I'd be curious. I'm going to do a look into that and to see if any of these
I don't know the answer to that one.
That have exposure to that growing sport, if any of them are public, because it could be interesting.
Yeah. I don't know who makes the bats or that, into that sort of thing, but yeah, definitely growing.
What about you? Have you been able to get out on the golf course yet, or is it still pretty chilly over there?
It's been cold, wet, and miserable. So it's like I said, this is the weekend that I get the motivation for digging out the clubs and playing properly. Watch the Masters, lock myself down for the weekend, and dream one day that I can hit the ball like them.
One day, yeah. I mean, it's exciting. That's always a big, it's a good sign when the Masters is on, that it's like time that spring it's going to start getting warmer, and then next thing you know, it's time for you to be out on the course. And but for me at least, it hardly ever goes like it does for the pros that are playing the Masters.
So who's your bet for the championship then?
So right now, I actually have I had Spieth.
Yeah.
And because I think he's won the Masters either once or twice, but they were both like at this point, 8 years ago. Like I feel like so, and I know he can do it, and he's been playing a lot better the past couple years. So he's gonna have a shot. Victor Hovland, I think, is pretty good too, and might be a decent pick. I think he's actually playing pretty well right now. He's like
-3. Yeah, leading.
Okay, 3 under right now. Who else did I have one other pick that I had. Oh, I like, this was my dark horse out there, who I don't think he's teed off yet. Joaquin Niemann. I have him like plus.
Oh, yeah.
I forget what it is, but he's on the Live Tour now, so he's kind of been flying under the radar, but he's probably like 22 years old, 23 years old, and a really good player. So I think he's poised for that kind of breakout performance in a tournament like the Masters.
Yeah,
How about you?
Scheffler to do it again.
Okay, Scotty Scheff. Yeah, he's if he's playing his best golf, I don't think there's anyone in the tournament that can beat him.
Yeah, he's amazing at the moment. I had Hovland as well, like you. Cameron Smith coming from the Live to upset the traditionalists. Even if I was to pick a British player, Hatton maybe as an outsider.
Not even Danny Willett.
No, he's. I think he's gone now. But
yeah,
Hatton is my outsider from the UK.
Who was the last?
66-1. You can get on him.
Tiger. Yeah, he's. I think Tiger looks like it's 2 over right now. Who was the last Englishman to win the Masters?
Probably Danny Willett. I'd guess.
Oh, he won. He's won one before. Okay.
Yeah. The only thing he's ever won, I think. So he's won 15-minute of fame thing. I think before
Adam,
that, sorry.
Oh, go ahead. No,
I was going to say you got Nick Faldo, Sandy Lyle. He's retiring. I think it's his last tournament over there this time around. He won it. Ian Woosnam. We don't. Europeans haven't done too badly over there, actually. Garcia, I suppose, maybe the last European, I think, possibly.
Okay, yeah, Sergio's, he's doing all right now. Looks like 2 under. But yeah, Steven, so that's actually fun for you guys, that you guys get to watch the Masters kind of later in the evening. For us, it's during the day. Yeah. But it's nice that you guys like get to watch it after work, maybe have a couple pints with it. The timing wise, maybe I got to do that sometime. Go to Europe to watch the Masters.
Yeah, I know it's big over here. It really does start the season off for everyone. The driving ranges golf clubs come next week will be packed because everyone's watched this over the weekend and been inspired by the the golfers to try it out and get stuck in again.
Beautiful. I love it. I should say, I mentioned looks like the markets had been absolutely ripping, or at least tech has been. The Qs in the last hour or so are up. The Qs are up like a full percent. So I don't know if there's something going on. I think Bullard, one of the Fed guys, is speaking right now. I have no clue what's going on, but looks like the market's moving.
Yeah, no, I don't know what my positions are doing at the moment. So I can't see it at the moment. So
well, I'll let you go. I'll let you go check. I'll let you go check your positions as well as watch the Masters. But Steven, thanks for hopping on. We'll catch up next week.
Will do. Thanks, Aaron. See you soon.
Of course. Bye bye. Alrighty, y'all. That was Steven Hoad, the Stop Hunter. Gonna go ahead and share his YouTube channel in the chat if you'd like to subscribe and see more great content from Mr. Hoad. All right, I've got my man downtown Nick Brown hanging out backstage. So without further ado, let's give Nick one of our special Zinger Nation welcomes because he deserves it, and he's been off the show for a few weeks. So without further ado, let's bring Nick on. Hey, oh, didn't work. Hey, Nick, how are you doing?
Good. How are you?
Good. How's school been?
Good. We're almost over.
What, like one more month, or when's your last day?
46 more days.
Okay. So if you guys don't know Nick Brown, Nick is almost finishing up high school. He has been tweeting stock market news. Let me go ahead and pull up your Twitter. News by Nick. Twitter. He's been tweeting stock market news for how long, Nick? 2 years now?
Yeah, just about. Yeah, we'll say 2 years.
Okay. And as you can see, so he's built a very impressive following. He has almost 6,000 followers, which is like about more than 6 times the amount that I do. 17 years old. So, and he's now was an intern with Benzinga, so you're going to be working full-time with us this summer, correct?
Yes, so we've changed the bio to being a reporter, as that's now my title, as I officially understand. I'll be a reporter with Benzinga.
Wow. Well, congratulations, Nick. So have you had a chance to been able to keep up with news throughout the past couple months as you've been in school, or is that kind of taken a back burner to everything else going on?
Really, I've been able to keep up, check early in the morning, and if you guys don't know, I am transitioning a lot of posts over to the Benzinga Twitter account, so you'll find a lot more news over there. Still going to continue it on my personal Twitter, but a lot of stuff on Benzinga on the official Twitter page. So you'll see a lot more stuff, a lot more charts, a lot more tweets regarding the news, and a lot of that is coming from Benzinga Pro. So we're trying to connect that Benzinga Pro to the Benzinga Twitter page as well.
There you go. So Nick, what have been the top headlines for you? Like, what's been the most exciting things for you to tweet about the past couple weeks?
The AI. We're starting to hear more companies transition into the ChatGPT and the artificial AI and how that's going to impact. And so Goldman Sachs released a note a few days ago, possibly last week or 2 weeks ago, saying that AI could possibly take over 300 million, I believe 300 million jobs. And so that's going to be very interesting to see how ChatGPT. We saw something in the Wall Street Journal this morning with Google CEO Sundar Pichai talking about this AI and how different companies are going to develop this. Meta released something yesterday, according to Nikki Asia, with ChatGPT and how they're going to be incorporating that into the personal ad business. So that's taking over the news. Plus, I heard your comments. We had Bullard on the wire this morning really saying a lot of repeats about inflation, that they got to get it under control, that, just the normal stuff. And so, but I do want to, one piece that was very interesting from the Wall Street Journal, Nick Timiraos, their Fed correspondent, he tweeted something very interesting this morning with the last rate hike, that there was a 48-hour notice that there were some communications going on inside the Wall Street Journal or inside the Federal Reserve, really talking about how they're going to be able to, if they should hike and how much. And so he did a great piece and reporting on that. And I encourage everybody to check that out because it really goes to show that these decisions are made, well, at least this one was made like last minute because of the Silicon Bank collapsing and a lot of other banks with Silicon Valley, Signature Bank of New York. A lot of these banks collapsing really did put this pressure on the Fed. Should they go 25? Should they go 50? Should they stop? So it was very interesting that he released, he had some inside reporting to detail how that was being made inside the Federal Reserve, something that we normally typically don't see.
Yeah, that makes a lot of sense. I mean, it's tough because I think like with the Federal Reserve and they're coming up on that decision, right? You have so many people that want to just deal with inflation first and foremost and say, hey, we need to keep hiking. We need to make sure inflation comes under wraps. But then you had all that uncertainty in the banks, and next thing you know, if you get what I mean, Silicon Valley Bank, and I've talked a lot about it on the show, and a lot about how its problems were kind of centralized in the tech and high growth space. But at the end of the day, it was the 16th largest bank in the United States. And if you have another bank of that stature, like if you have two in the top 20 collapse all of a sudden, then you're talking about like real economic uncertainty. I mean, we basically did. I mean, with FRC, I still don't really know what's going on with First Republic. Like, I personally think it seems like the situation's fine. I'm not gonna say that anyone should go out and buy this stock down at $14, but like, am I worried about this collapsing tomorrow? I don't think so. Didn't they already had someone come in and step in? I'm not sure.
Well, I'll say we get bank earnings next week, and I really think that the big banks, JP Morgan, Goldman, Bank of America, Morgan Stanley, I really think they're going to shed some light on how the banking industry has been and how deposits are coming and withdrawals are going to be coming in to other banks, and how you go from Silicon Valley, Signature Bank of New York to transition to these other mid-sized community banks and how they've been impacting. I think the bank earnings are really going to set the tone and really going to set the bar for how this earnings season is going to be for Q2 at least. Well, for Q1 and Q2. I think Q2 is really going to be saying, hey, well, I don't know about that with the deposits. We're really going to have to be careful and watch for guidance. I think guidance is going to be key this quarter. But I also think, too, is how are these banks dealing with the sudden collapse?
Yeah, I mean the FRC. So I just pulled up the article to get a refresher on it. So I couldn't remember exactly who gave them a lifeline, and that's because it was multiple people. It was 11 big banks. So they basically got like a bailout from the entire banking industry. Probably because the banking industry realized, shoot, if we have FRC collapse in addition to Silicon Valley Bank, next thing you know, you're looking at a huge banking catastrophe and all of this going on. So I think those other banks were willing to step in and give it a lifeline. But like, so my thing with the banks right now is that with Silicon Valley Bank, you had these companies that had a lot of withdrawal pressure, meaning they needed to access their capital to keep the lights on at their companies because they were high growth startup type companies that weren't really making money yet, that didn't have any revenue yet. They didn't have money coming in, but they needed to keep the lights on, so they had to go to the bank and pull out money. And basically no bank, because they're buying bonds and other investments with people's cash, most banks don't have enough money on hand to pay if everyone came in and asked for it at once. A stock or a bank like First Republic Bank isn't working with exclusively startup companies like that. So even though the company First Republic may have been poorly positioned in the sense that a lot of the treasuries they've bought and have depreciated in value, as long as there's just not this type of bank run on First Republic as there was on Silicon Valley, then the company should be fine in the long term. I mean, they just have to wait for these securities to, mature and stuff, and they're probably hedged against it. I mean, they just got a $30 billion lifeline now, so they could be buying with $30 billion at 4% or whatever. That's a lot of money. So I am not too worried about the overall banking industry right now. It sounds like Jamie Dimon still is, but I mean, if you look at the market, if you look at how XLF is trading, I mean, the past couple weeks, if you go back to March 15th, so almost a month now at this point, like the market hasn't been seemingly too worried about it. XLF's just been kind of hanging out. Still, a few bucks down from before Silicon Valley Bank, but it's not like this thing's in a free fall or anything.
No, and we're going to have to really once, details start coming in and bank regulators start really focusing on this, it is going to be very important to see who is responsible for this bank collapse. Is it San Francisco Fed president? Is it the San Francisco Fed Bank? What did they not see? Is it Washington? Who is to blame for all of this? That is the one question that needs to be answered that I think is going to be the important, because someone didn't do their job. Someone was sleeping at the wheel. And I really think that raises the question, how is another bank industry going to go down? Is another bank's collapse going to happen? And if so, how are you going to prevent it? I think regulations and measures need to be focused. But there was some talk whenever Michael Barr, the crypto person, I think he's crypto for the Fed, when he testified on Capitol Hill, he wants to introduce new regulations. You can't introduce new regulations if you already have old regulations that didn't even work.
Yeah, I mean, that's kind of the nature of regulations, is that, well, I mean, it's bad to make regulations that don't work or don't address the problem. But I mean, like they a lot of times they don't know what they need until something breaks, and then they got to step in and regulate. So ideally you'd have more foresight. And a lot of people have been kind of talking about these banking issues for a while. And I don't know. I mean, it seems like the finance industry as a whole, if history tells us anything, and there's the old saying that, like history doesn't repeat itself, but it often rhymes. If history tells us anything about the banking industry or the finance industry as a whole, is that there will be these cycles where they, kind of create their own problems. Banks get too greedy maybe, and next thing you know, there's a big crash, and then there's new regulation, and then the cycle kind of starts over. So, I mean, I'm not saying that it's for sure going to happen in the next however long, but eventually there probably will be some sort of big thing like that happened in, whether it was, you go back to the Great Depression or the 80s or 2008 or whenever it was, or 2000s when you had that .com bubble, right? It's Wall Street just getting a little bit too, I don't know a better way to put it other than just like too greedy.
Yeah, it's going to be very interesting to see how these banks are going to be shaping up, at least through first quarter and when they report results starting next Friday. I can't believe earnings season is already approaching upon us. And so it is going to be very eager. I'm very eager to hear what Morgan Stanley, JP Morgan, Jamie Dimon, and what all the big bank CEOs have to say regarding the banks, how they view this crisis, how they view this collapse, what they're seeing different, how are they giving money, if they're really partnering up with the other banks to prevent something like this. It is going to be very interesting to see how that happens. When we get the next Fed decision, it's going to be very interesting to see how inflation has continued, to see if we get another rate hike. There's a lot of talk that the market's already pricing in a few cuts this year. Not exactly really sure if that's going to be happening, if that's going to be the case or not, because inflation is still running rapidly. And so now we just got these OPEC cuts. And so oil is heading higher. So we have a lot on our plate here as we head into Q2. In Q1 GDP, that's going to be another question. Is it going to come in at 3%, 1%, 2%? How's the economy really doing? So it's going to be very interesting to see how all this eco data shapes up to be.
Yep, 100%. And you know where to find that economic data. That will be on Benzinga's Twitter page or at News by Nick. Nick, I've got to bring on my man Rob Roy here, and then if you want to hang out backstage, we're going to be finished in about 10-15 minutes. Then we can do some final headline checks before we wrap up the show.
Perfect.
All right. All right, y'all. Without further ado, let's flip over to my man from Wealth Builders HQ, Rob Roy. Let's give Rob one of our very special Zinger Nation welcomes. Mr. Rob Roy, how you doing on this beautiful Thursday?
Aaron, I'm doing fantastic. How about yourself?
I am good. What have you been trading? How your trades been?
Trades have been pretty good. Only one today. I really wasn't very interested in doing a whole lot today. End of the week, as far as with the holiday tomorrow. But overall, we've done very well. Probably our best, not best, second best March ever. So overall, pleased with how it turned out.
Love to hear that. So what stocks have it been? Your usual suspects?
My typical 20. Today was Costco. Of course, we had that news come out on them pre-market. And, I called a bear call spread on it or a directional trade because it's a stock that I do trade. And the credit spread I could get nothing for. It was just too far of a gap away. But I was able, if I go over to my intraday charts, to my 1 minute, I really want to talk about the pattern that presented itself today and why I did what I did. I'm going to be teaching shortly on it to some of our higher level coaching students. This thing I'm calling micro day trading. And we got the gap down, and it's a 1 minute chart, right? We pushed back up. You'll see this horizontal line here. We just had all of these tops just, finalizing right there. We ran right into the the 8 moving average, and we rolled over. And that rollover on this 1 minute candle was the entry into the trade. And then we just get this great push to the downside on the 1 minute. We just followed through very nicely. And then we came back up and we ran back in over here. And I got to see what time I actually got out exactly. It was a little after 10 o'clock. So, but we ran up into the 8 moving average, and I'm okay there because we failed. We came back down, but now we start setting up this wedge through these bottoms in here. And again, this is a 1 minute. Through these bottoms, this top here, we start pushing down, and right in here was one of these 2 candles. I took the exit. I just didn't like what was happening in there. It was just too much of that sideways move, and we picked up a little bit of change on it, so not too shabby for a trade. In at about 485 and out somewhere about 478, 79, somewhere around there.
There you go. Yeah. So what was the exact news on Costco again?
They had they got
inventory concerns or something.
Oh, it wasn't inventory. It was and I pulled it off of your site this morning actually. What's the news? They had
I saw the headline.
Yeah, disappointing sales. But again, the first news I saw about it, they showed up on an upgrade list for reiterate their rating from one of the brokerage firms. And I saw we were down $12 in pre-market, and something was off. And a quick look told me that we were down about $12 on this news. So it's their sales numbers. Their sales growth is where the problem ran into today.
Got it. And I know some people will take that and extrapolate it for the whole overall economy and say okay, if Costco sales are bad, that might mean sales are going to be bad here and there and there. I mean, obviously Walmart, Target, your big box retailers are Costco's closest peers. What about your other, Booking, anything like that setting up? I know tech's been pretty hot the past couple weeks.
Tech has been hot. We've done extremely well and that's mostly what we've done. Our numbers have been tech. Booking, ran up. We had this great move to the upside here. We've had one trade go off in there somewhere. It was just a day trade, so we didn't get the whole run. Actually, let me bring that a little bit closer there. So on this run in there, this pullback is what we've been waiting for, right? The moving average is a little far away from the fib line. We could take a bounce off of the 2553 level up to, as of today, right about 2600 inside of that. And we ran in that. We had the whole gamut there today. We opened, dropped all the way down. If you wanted to try to take it on a bearish, I wouldn't, but you could have taken that. But if you waited for the push down to 25.53 you got that bounce off it. And even if you got out now at 25.83, you're talking about 30-point move today. So Booking has phenomenal moves. But if you are a newer trader or very risk adverse, Booking is not your company. They don't normally have enough open interest and have very wide bid-ask spreads. So caution on that one.
Got it. Anything else that's been setting up for you today? Any other charts you like?
As for today, I'm pretty much done trading for the day already. This is kind of a holiday weekend. People are getting ready. They're going home at the exchanges already. So you may see lighter volume this afternoon. I do like the bounce we had on Apple today coming off of the moving average from yesterday. And that's, we just had this in a training we gave where someone thanked me profusely because they couldn't understand why they kept getting messed up. Right now, I'm looking at yesterday's closing price on moving average. We can't look at what's going on with today's price because it's moving. It's all over. We don't have a steady number. So I would snap that 162.84, that pink number, from my previous day's close onto my current 5-minute chart. And then I'm waiting for the pullback to that 162.31 and a bounce. We got a gap down and a breakout. So if we look at 162.84 on Apple, let's go drop a line in at 162.84. And let's see how that actually held up. 162.84. All right, perfect. So, Aaron, you know my style. You know exactly what I look for, the pattern, right? It's the same pattern over and over again. We got a breakout today. We retested it. We bounced, and there's the entry. It's as hard and as simple as that. Too many people make this way too hard.
Yeah, that's what I like about, I mean, your system is it's pretty straightforward, right? You got your fib levels, you've got your moving averages, you know where you want your entry points to be, you know your price targets. And I think that by having a simpler approach, it makes it a lot more repeatable, right? To hit those singles over time.
Exactly. And I've had a lot of calls that I've met with clients that are in some of our higher level coaching programs within this last week and a half. And we talk about problems, what issues they're facing, what concerns they're having, why they're not seeing the successes that they want, and or how do they get better successes than they're having. And some of it is the exact same problem. They're running into the point of not having the strategy where they're comfortable with it. And they can't get comfortable unless they're placing trades. They don't need to be funded. I prefer non-funded to start. But if you're not hitting that enter key again and again, you're not going to get this. I don't care how good you think you are or how fortunate you've been on some of the trades you've done. Aaron, I did 300 non-funded trades, 300 paper trades in 30 trading days when I first took my training back in 1997.
Wait, how many paper trades in 30 days?
330 trading days. So
wow. So 10 trades a day?
10 trades a day. I was working 12 to 16 hours a day at that time in manufacturing. It didn't matter. I did whatever I had to. And the funny thing is, it was one piece of paper for the trade. Each trade was documented on paper. There was no, paper trading platform you could use. You wrote it on paper.
Wow. All right, Rob, how about I saw someone asking about this stock in the chat earlier, Netflix.
Yeah, I think I've heard of these guys before.
Yeah.
My top 3 candidates right now are that I look to trade every day: Netflix, Nvidia, Tesla. Those are the 3. They seem to be doing extremely well for me. The intraday setups have been amazing. So for the last 3 months, they are the go-tos every morning as we get started. So we're right now sitting at the 8 moving average. We literally are right at it right now at this point, right? Earnings coming up soon. I think it's the 18th. It is. It's the 18th confirmed. So, if we get a bounce off of the 8, I would consider an aggressive bullish entry, but it has to be aggressive. We're too far away because no matter what, you've got all this room down to here to get down to that fib line. So there's a lot of distance in there. I would prefer the moving average was closer to that fib line. We just don't have that luxury right now. So if you took it, just do it with less contracts. Look for the close and the bounce with 346 to the upside as the target. And we're probably looking at about 335 as a stop if we're wrong.
Got it. Yeah, I mean, I think Netflix has had an incredible recovery. Obviously, it was one of those stocks that after a couple bad earnings reports in a row was one that no one wanted to be caught holding, was down about like 75, 80%, I want to say at one point, and has come roaring back up 100% from its lows. And this next earnings report, I think, will be a big one for the company to see if it can continue that positive momentum or if people are going to take this, as an opportunity to take some profits and sell a little bit up here.
I agree. They've done phenomenal. I'm very pleased with how they've moved. I do own them longer term as well. They're a great business, but I'm very much a tech type person. Even you look at Meta. I mean, I was very much as Facebook Meta was dropping like a rock. I was like, yes. How much did Zuckerberg lose today? Right? Because I did not like and do not like some of the things he does to run the company. But this recovery he's made, you got to give him kudos. They did a phenomenal job with this comeback where they come from below $100 and they're over $200 right now. So
yeah, incredible run on incredible run on Meta, and I think a lot of people, you know, I think a lot of people were too scared to touch it, and same thing with Netflix when it got down there. But really, those were the best buying opportunities. And of course, hindsight's 2020. But you know, keep that in mind for the next time we see some big drawdowns like that. All right, well, Rob, do you got anything else for us today?
Just focus on the S&P 500, guys. We put in a swing high on, I think it's Tuesday there. So we put in a new swing high right here. This was on the 4th, which was Tuesday. Okay. So what is a swing high? We had a high on Monday. We had a higher high on Tuesday and a lower high on Wednesday. That makes this a swing high candle, right? Our swing highs and swing lows, oh, not what I wanted. So our swing highs and swing lows are very important in the calculations of what, if anything, are we going to trade. We had a swing high here, right? But that was on our way down. This one was on our way up. And we surpassed this, which was great. On the way up, we broke through this, and that's fine. We're looking at this 4181. Just go ahead and drop a line at 4,181 on your S&P 500 chart. It is a pure Fibonacci number, and it is one that you should never come off. That should stay on there. And go back historically and look at daily, weekly, all of it, how important that line has been historically at major shifts in the market come right at that point, as it did right here just a few months ago. So that 4181 is critical. And we've got to get above that 4181 to me to get to that next bullish leg. We've got to break out above that level.
Got it. Yeah, I mean, I love having these defined levels like that in the S&P 500. I've found that's one of the things that can be most effective if you're trying to get better at trading or just starting out, is start with the indices, start looking at the overall market, find your levels there, and then that can help you across the board.
Right. One of the students I spoke with this week, I asked, what stocks are you trading? And he said, I'm trading the spiders, the Qs, the diamonds, and the IWM. And I said, why did you focus on those? He said, because you told me to. And how has it worked? He goes, SPY is my favorite trade of everything. And I look at that every single day as a potential entry. It's a great position for a newer trader, low volatility, options expiration every single day, which means you can get very low cost. There are tight bid-ask spreads and massive open interest on the position. What a great position for anybody to trade, but particularly a newer trader. I think it's great.
Yeah, well, there you have it. All right, Rob. Well, great to have you on. Enjoy the day off tomorrow. Any big weekend plans?
Yep, my wife and my daughter are both teachers. They're off, so we've got some running around. We're doing Easter plans this Sunday with both of our moms, which is fantastic. I'm really looking forward to that.
Awesome. Well, all right, Rob, have a great weekend. We'll catch you next week. Or actually, sorry, we'll be in Miami next week for our Cannabis Capital Conference. We'll catch you the following week.
Fantastic. Well, guys, listen, if you want to know the stuff I talked about to my students the other day, it's called Key to Be Free. We just did this training last week, blew it away. If you go over to tradinglikeaboss.com, you can go watch the replay of it. Actually, we haven't released it yet, but next week I'm doing 2 more of them, 2 more live classes on Thursday and Saturday of next week. So go ahead and check those out if you have an interest.
Awesome. Well, Rob, thanks again for joining, and we'll chat to you in a couple weeks.
All right. Thanks, Aaron. Have a great one.
Of course. All right, guys, I'm going to go ahead and drop that link in the chat for Wealth Builders HQ stuff, tradinglikeaboss.com. Let's bring Nick back on the stream. Nick, how are you doing, my man?
Doing well. Just catching up on a few things.
All right, what are you looking at? 'Cause we're going to end the show a little bit early today, so let's just do a quick 5-minute headline check before we sign off for the day.
Just talking about UBS, CEO said to Credit Suisse staff that there will be change in hard decisions. That's a memo seen by Reuters. Bloomberg is reporting that Ford expects only one all-electric vehicle currently in its lineup, the F-150 Lightning, to qualify for the full EV tax credit. Disney just naming its first ever chief brand officer. That's as, as we had other cuts last night, that they had some other cuts in the company. Looking for the jobs report tomorrow as the market is closed. Expectations are going to be that the non-farm payrolls comes in at around 240,000. Some are looking for 200,000. Unemployment rate sticking to 3.6%. Average hourly earnings month over month, 0.3%. Year over year, 4.3%. So jobs report is going to be coming out even though the market is closed tomorrow. Remember, bond markets do close early this afternoon at 2 p.m. for the shortened trade holiday. NYSE and Nasdaq are going to remain open fully today, but everything is closed for tomorrow for Good Friday.
Yep. And then like let me pull up my Benzinga Pro. We'll flip through some stocks real quick. What Nick, let's pick some from the chat real quick. So I saw some people talking about some of the AI stocks. You were talking about AI earlier. C3 AI up about 11% on the day. That's starting to heat up. Nvidia getting a little hot again. Which ones have you been looking at mostly in the AI, Nick?
I was going to say, there was a report from Reuters the other day that Google come out saying that their artificial intelligence or whatever they're using is way better than NVIDIA that will help them with this AI. So it is very interesting to see some competition between the different companies. It is also interesting to see that the UBS CEO deal should be completed soon, or not soon, but roughly 3 to 4 years. But the expectation is that UBS is going to be laying off at least 30-some thousand workers. And so now whenever Credit Suisse comes back, whenever they're bought by UBS, are there going to be more layoffs? And it's very interesting to see how the inflation story is shaping up to be, how targets are supposed to be shaping up to be. Many still expect S&P to end the year around 4,000. We still have the Fed. So the Fed, the jobs report, we still have a lot of eco factors that are going to determine a lot of this outcome. And so AI could be put on pause. Bill Gates, I believe Bill Gates was the one that said that we should put AI on pause. Elon Musk for Twitter, I'll just say when he changed the Twitter logo on the homepage to a dog for Dogecoin, that really just shows his color and what he's trying to represent Twitter and how he's trying to make the company and involve the company.
Yeah, that was, if you were holding Doge, you were happy about that. I know a lot of Twitter users weren't too happy about that. All right, well, Nick, unless you've got any other big headlines, I think we're going to go ahead and wrap up today. I know we might do a special stream tomorrow for the jobs report, but of course, with no market open, I don't know how many people will be, from our audience will be here on YouTube. So we'll talk about that a little bit off stream because I think we can definitely do something, but we'll figure out what that is, okay?
All right, perfect.
All right, Nick, well, enjoy the rest of your Thursday. Enjoy your day off school, and we'll chat soon, okay?
Yep, thank you. Have a good one.
You too, Nick. All righty, y'all. It is about 12:35 p.m. Eastern. We're going to go ahead and wrap up a few minutes early today. We've just got some housekeeping items here. Again, we will be doing something for the jobs report tomorrow, so look out on our YouTube for some sort of content around that. But next week, we will be streaming our Cannabis Capital Conference live from Florida on this channel. No, we will not be. To get access to that stream, visit benzinga.com/event. We've done that every other time. Like, I don't know. I make a free account on the website, and then you'll be able to watch our content. I'll be doing live interviews. I'll be doing some AB on the street type things. We'll be doing a lot of jazz down there in Miami. I'll be writing articles. We'll be doing it all. So make sure to go to benzinga.com/events to get what you need to come see us next week. Get a ticket. Fly down to Miami. Why not? It'll be nice. It'll be fun. We'll hang out. I'm down to go to the beach. Otherwise, we'll be back live on the channel with our normal programming the following week. So looking forward to seeing people who tune in next week to the Cannabis Capital Conference. Otherwise, we'll see you in about a couple weeks. Peace and love, y'all. Stay green.
This is Ben's